So states are broke in raising taxes, but where it gets interesting is, as we talked about in the past, the federal government passed the One Big Beautiful Bill Act, and a lot of states don't want to play along. And so what's interesting is that just because the federal government hands you a tax cut, the state may not oblige and the state may not play by the new rules. And this is something a lot of people don't understand. And it's called conformity. And so states get to choose how much do they want to conform with the federal government's tax laws. And in the past, a lot of the states have conformed. And we have a chart down below that we're going to put up here that most states have what's called rolling conformity, which means that they automatically adopt federal changes as they occur. But what's happening is that because of the One Big Beautiful Bill is another tax cut, a lot of states are now looking to actually get out of rolling conformity, and they don't want to apply these tax cuts at the state level. Why would they do that? Because their budgets are in bad shape, and they know that if there's less income coming in, that's less revenue to them. So it's interesting to see, and even here in Arizona where we're at, our governor is already having conversations, and she wants to get out of conformity because, again, she wants to help make sure that the Arizona budget is shored up and increase revenue, essentially.
Yeah, it's interesting, I think, because most people assume that their state is going to follow the federal law, and that's not the case. And they may not find out until they file their state tax return that that's not the case at all.
Yep. All right. And a few things that drive some of these big deductions. So what are some of the big cost drivers? The first thing is the state and local tax, the SALT cap. So that was raised from $10,000 to $40,000. So that's the amount of state and local taxes. Think property taxes is the biggest one here that you can write off. It was capped at $10,000. Now it's capped at $40,000 so long as you make less than $500,000. So that's going to be a huge boom for those, I'd say, making $3, $4, up to the $500,000. That's going to hurt the states.
Yeah, and one thing on that, you might want to mention it's down at the pass-through entity tax.
Yep.
I should have looked at these notes beforehand.
You should have, yeah.
I'd sound smarter.
The pass-through entity tax is still around, PTET as we call it. So that was made permanent as a workaround that pass-through businesses, S-corps and partnerships, can pay their state income taxes through their business tax return and still write it off at the federal level.
Yeah, and that was a state reaction. It started small, and now virtually every state that has the SALT issue has that workaround for business owners like S-corps, LLCs, partnerships.
Yep. Some other things that are going to be driving some of these budget deficits here, some of the cuts, 100% bonus depreciation, permanent restored. So we see all these data centers going up everywhere. A lot of, you fill those up with the server racks. Those are being 100% expense. So there's a huge boom. It's working. There's a lot of huge GDP growth, and the numbers are crazy, but there's also some great tax benefits behind this. So, President Trump's play is working out there. R&D, you can now fully expense that versus amortizing over 5 years. A lot of states don't want to conform to that because that was a huge revenue raiser for them.
Yeah, Section 174.
174A, yep. And then Section 163J, the business interest expense limitations revert to EBITDA instead of EBIT. So essentially, you're allowed to write off more interest if you're a highly levered company. So those are some of the big things. Last thing I would say is the qualified small business stock. They're not going to feel that in the short term, but 1202 stock was increased from a $10 million to a $15 million exclusion at sale, but people won't feel that for 5 years if they created a new stock after July 4th, 2025.
Yeah, although they get 50% after 3, 75% after 4.
Yep, exactly.
Yep.
So some real impact here to some of these states. So Michigan is projecting $2 billion in revenue losses over 5 years from OBBBA. So they've actually done the analysis and quantified it. So hence why they are looking to stop conformity. Pennsylvania, $1.1 billion in 2026 alone. Delaware convened a special legislation session to address a $400 million revenue loss. Illinois and New York, we already talked about them. They're broke. They're now really struggling here with this too. So a lot of the state legislators had already adjourned when this bill was signed last summer. So just now, a lot of these states are looking to get caught up and then most likely looking to make some retroactive changes starting in 2026.
Yeah. And guess what all those states have in common? Their weather sucks compared to ours right now. Come out for the weather and come out for a better run state.
Yep. All right. So what does this all mean? Again, it's just states looking to raise more revenue. States have bad balance sheets. States increasing their taxation. And again, this goes into kind of what our previous point was. I think there's going to be the haves and the have-nots when it comes to states. And it's going to be interesting that people I think are going to vote with their legs and moving, and because I don't see with some of these changes how things are going to get better in these high income tax states in the next few years.
No, and in addition to the spending, we also forget the waste. I got to imagine there's so much waste in these governments. I mean, if you just look at the fraud in Minnesota as just the tip of the iceberg for what goes on in these big bureaucracies, because there's no real reward to get more efficient. And, you know, fraud is one thing, but just the inefficiencies and the wasted money, I bet, is unbelievable. I mean, running our company, we have to look at every line item. We have to be efficient. We have to make sure we're using our money wisely, because if we don't, we go out of business. But the states don't go out of business. They just keep, you know, churning along.